Driven by fear rather than fundamentals. Joining us here at Post 9 today is Alger CEO and CIO Dan Chung. It's great to have you, Dan. Welcome. Thanks
for coming
in. Your general view is that we're still early in the build-out, and that means a lot of opportunity ahead.
That's right. I mean, the results that just reported by most of these companies were terrific. The only negative was that they all increased their capital spending on building out their data centers in particular to serve AI.
And the so-called yield on that CapEx, you're constructive on?
Well, I mean, this is the classic kind of crossing the chasm problem. They're building it now. When will the profits come? Early days, but we should remember from past examples of mobility or e-commerce itself. Amazon early days building out what is Amazon today. But there's clear signs across the economy and in many industries that AI adoption is accelerating. Real applications are driving productivity. And, so it remains to be seen, but we're quite optimistic.
There are some who argue that the best thing for the market, or at least the sector, would be for one of them to say, we're getting back to focusing on cash flow. You think that's necessary or even possible?
Well, I was just talking with my internet analyst, who's extraordinary. I don't think it's going to be possible in the next 2 years. I mean, they're increasing CapEx at about 100% rate, 60% rate. That's the low end, 60% increase.
Yeah.
And these are giant companies, right? This is Microsoft, Amazon, Google. However, the interesting thing to think about is if that CapEx, in my view, starts to slow because it's rationalizing around 2028, how soon does the market start to price in the huge free cash flow that will revert back to shareholders? And, typical stock market answer is the market looks ahead. So probably, certainly in 2027, they'll be looking at, really interesting return to free cash flow growth from admittedly very low levels right now because they've been spending it.
So if you were patient, buying this year wouldn't be necessarily out of line.
I think if you're a patient investor, this is going to be an extraordinary buying opportunity if it continues to develop like this.
The other thing you're watching, I understand, is sort of application, right? Whether or not the wearables are going to be, what part of this is going to be worn, if it's going to be glasses, if it's going to be a pendant. Is that conversation heating up?
I think the conversation of the devices is heating up, but what's really super hot right now is software. That's probably the one sector in tech where I think there's more caution is warranted. Because AI's ability to write and create software, and also the ability to write and create videos, for example, movies, is already here and extraordinary. So the cost to create software is falling, which means a lot of the old business models for software could be challenged by new businesses creating software at much lower costs and therefore offering it to consumers and businesses at much lower prices. So people are very worried about the software business model, and I think that's one of the legitimate areas of concern.
Yeah, so the divergence, for example, between IGV and the NDX, that makes sense to you? We haven't seen that in like 20 years.
Yeah, it does make sense to me because software has been in a 20-plus year golden era. I think, on the other hand, if you look at what's happening in semiconductors, data centers, other infrastructure like cooling, most semiconductor equipment, these stocks have all taken off. Memory, for example, the raw infrastructure for what will be a really big AI build-out and really big AI adoption is doing extremely well.
Right. So, and these predictions that the shortage in memory is not going to be resolved in 26 and maybe not even in 27. Does that allow you some time to be patient for pullbacks in Micron or Western Dig or others?
Those are tough. So we own a lot of Western Dig. We like it a lot. Obviously, we're going to continue to hold it. It would be tough to say whether to buy that now. I would look for the pullback there. And I think the places to look for opportunity might be outside of tech, while people are still sorting out this. Is the CapEx going to be generating a return? And that's why we brought up, for example, healthcare, which has been an underperforming sector for multiple years. Last year was a very difficult first half because of administration policy changes creating uncertainty. But that sector looks to be a big beneficiary of AI itself. I mean, it's AI in clinical research, in management of healthcare delivery, in pricing insurance better.
So not just drug discovery, for example.
Not just drug discovery, which of course has been talked about, but AI itself, big industry, non-economic sensitive growth, obviously, lots of innovation there, lots of opportunity. And so right now we think, healthcare has some interesting opportunities that investors should be looking at.
Would you argue it's your second favorite sector after tech?
Okay, so I should be clear. We still like a lot of the Mag 7, the big internet players, because we think they benefit from AI. So after tech and those guys, I think healthcare is an interesting sector, and also industrials.